Good afternoon and welcome to FYI Resources Investor Webinar. On today's call, we will have Managing Director Roland Hill provide a detailed overview of the FYI Resources investment thesis, as well as, most importantly, the pre-feasibility study that was released last week. Roland, I'll now pass over to you to get started. Thank you.
Thank you very much, Simon. Hello, everybody. Yes, so welcome to FYI Resources PFS discussion and update to the market. We have a fairly comprehensive slideshow here today. So what I probably propose to do is flick through the slides that I hope everybody has in front of them. I'll touch on some, but hope to provide a little bit more time available to the more detailed presentations. So and probably leave a bit of time for question and answers if they're available. So what I'd like to do initially is, before we start in earnest, is just to emphasise the quality of work and the level of detail that has gone into the PFS. It's several months of very, very detailed work by some very experienced and skilled people, drilling down to a fairly unique industry, one that we hope that's going to revolutionise the production of high-grade, high-purity alumina. And the reason that we want to do that is that the current supply, the traditional supply that's from kaolin, is becoming disrupted through production and is not sufficient enough to meet current demand, which we realise through our investigations, through our work, through our marketing, both independent and internal, that both in terms of pricing and volumes is increasing to meet higher demand for higher specification products. So what I'd like to do is start off from the first slide and just run through a number of items there that we're going to follow, some topics, essentially just an outline on the market, the applications, understanding the PFS results, which is probably key to the discussion today, and then just get into a little bit of a bit more of the market engagement and what we propose to do under FYI to secure our position firmly within this growing market. So over onto the first real page 3, just a summary there, essentially, of what HPA is. I won't go into that because you're all online. If you're interested, you know that. However, specific to FYI is really what we want to do, and that is essentially we own our own mine up at Cadoux, which is about 220 kilometres northeast of Perth. We're going to mine and beneficiate on site, and then we're going to freight a refined beneficiated product down to Kwinana and process it there to our 99.99 specification. And as I said, the reason why we're doing that is we hope to disrupt the current production in the manner of speaking, revolutionising it from kaolin-based feedstock rather than the traditional bauxite through to aluminium. A very expensive process, and we're aiming to do it. The key thing is we're aiming to do it at a fraction of the price, so capital and operating costs. And because of this, we think that it was worthwhile embarking on PFS, which we've just recently completed, and the details of that can be seen on our announcement on the 25th of October in detail. And of course, we'll cover a little bit more in summary today. But we're hoping to position ourselves, thanks to the positive results, the really positive results of our PFS, putting us in the first quartile of an industry that's emerging very quickly. So the first quartile in terms of CapEx, OpEx, the highest margin and payback for any capital. And capital will be obviously a key. We'll talk about that a little bit more later on in the presentation. So turning the page, I just wanted to put a little bit of a summary there of our corporate structure, number of shares, and who holds the shares, bit of graph performance. We don't need to dwell on this, so turn to page 5, and we'll probably just touch on this as well. Why HPA is emerging as a commodity of significance is really the applications that it goes to. Historically, there hasn't been a lot of growth in the industry because there hasn't been a lot of high spec or high-end demand. That's now increasing because of the properties that high purity alumina, the HPA, now affords the development of some of these products. It typically has a very broad base of traditional uses, but of course is now increasing, and that is simply if we through the development of these, or the requirement in the market for high-end specifications. So turning to page 6, as I mentioned, it is historically it's been a small product demand, but now growing and growing at a tremendous rate, particularly big rate, and we're witnessing this particularly from LED, the market, and the graph there depicts that growth around about historically 38 to 40 odd tonnes per annum, around about currently now, but a tremendous growth leading up to 2025, and most of that from LED growth, but a little bit from the recently emerging battery markets, and everybody's very much aware of the lithium and the graphite that's going on. The market's not so aware about HPA, and of course it's our job to educate the market and see that it's going to be an alternative investment commodity, but aligned with that basket of stocks. So over the page, page 7, I mentioned the LED recently. Of course, that's underpinning current growth. LEDs come in many forms, different sort of structures, technologies. That no matter what the technology behind it, the sapphire glass, which is the key component, is HPA. That is a key component to all of that. Doesn't matter what it is. There's a little graph there that sort of suggests the LED growth replacing the traditional green and also the traditional, all those the incandescent lights. That growth supports the long-term growth, and of course the applications are growing, not only replacing traditional oil things, some images there of traffic lights, they're all going to LED, but also car lights, vehicles, but now also vehicles responding to that as well, and of course they're developing more and more uses for those, including the fascia of buildings, and that's the image there in the middle where a whole entire buildings are faced with LED lights. So that's underpinning the current growth, future growth, and growth applications. Over the page, on page 8, of course, is the batteries, and a lot of people obviously aware of this. Probably not so much aware about how HPA is applied to a battery. Yes, it's applied as a separator, but that application is also increasing between anode and cathode coatings, as well as entire cell coatings. So it looks like that the traditional use of separator, which is a key part in the thermodynamics, keeping the anode and cathode separate, it's a commodity, I think, that has proven itself in more recent times to be absolutely suited to this application, simply because of those qualities that were shown a little bit early on in a previous slide. There is a little bit of, I suppose, opportunity there for this to be increased, and I think through the increased availability of high purity alumina, these applications will grow yet again. But there's a nice little slide there depicting the use of HPA in the separators. Turning the page, I want to sort of more go from a broad market application to FYI in itself, and how we're going to address the production of HPA to meet this growing market. Our key project is the Cadoux deposit, the Kaolin deposit. As I mentioned, 220 kilometres northeast of Perth. There's a little map there. outlining our tenement area and our deposit. We recently spent a lot of time putting together our JORC resource. It's a good resource that we've spent a lot of time defining and getting to understand quite well. The key thing there, of course, is that the kaolin as a key component, whilst it's a fairly homogeneous commodity within a deposit, there is quite a bit of variability, and it's important to get a good understanding of the geology as a first phase to the whole process. So we'll touch on that a little bit, but there, over the page to the resource itself, the graphic on the left-hand side depicts our indicated resource. We came out just prior to the PFS and mentioned our indicated resource. You can see there it's a tiny fraction of our larger resource. That indicated in red outline is essentially what we're going to mine. That'll essentially be 100% our mining at this stage. That's enough material there to support a 50-year mine life. Our whole economics of our project is essentially modelled on a 25-year mine life. The resulting NPV, there's not much point modelling out beyond that. However, what we did is spend a lot of time concentrating our efforts on a smaller area so we could get to understand that resource absolutely perfectly. And the result is that all our metallurgical studies, our representative work, our variability work, and understanding how the geology that varied within that deposit, what sort of effect that would have on recoveries and test work, what kind of equipment we would need to support a very, very efficient process. So we understand the need to absolutely get this right. So we spent a lot of time on our QA, QC, our quality assurance, quality control in terms of getting the geology right, and therefore the metallurgy and the characteristics of this deposit, the unpat. And I think the results itself speak volumes. We were able to get a recovery of 99.997, which is the highest grade mentioned in the market to date. That's essentially going to be our base product. That implications there is that the efficiency of the plant and the flow sheet that we've designed around the deposit works absolutely effectively and won't take us too much effort to get to a 5.9 product at all. So we'll look at doing an upgrade to that in our BFS. It's essentially completed for our PFS, but we'll look to do that. And the other encouraging point to that is the recovery. We get a massive high recovery, also indicating how efficient our plant is with that 97.2% of the grade coming through. The other key point of that is that there's very little waste from this. The waste that we produce will be small, will be very small footprint, small waste, and very low environmental impact. So key to also understanding that whilst we are going to be mining on an indicated material for our processing material, we would look to put a reserve into the market, a JORC reserve statement shortly, and we're working on that. So that just gives us another level of confidence on top of mining on indicated. So leading now from the geology over to the page to the flow sheet. Of course, this flows on naturally from the ideal characteristics of the kaolin ore through to the hydrochloric acid precipitation leach process. That is, it's old technology, designed around about the 1940s for a different sort of purpose, but we're redesigning, reconfiguring it, adding a little bit of innovative flair to what we're trying to do. And I think throughout our PFS process, we've probably proven time and time again, not only with the recoveries and the grade, but how efficient and quick this process works. And of course, that was the key objective to our whole strategy, and that was to innovate the old technology so we can produce this quicker, faster, cheaper, less capital, less operating, but also have a reliable output, which is going to be the key thing to the market these days. Having substandard product won't cut it anymore. It has to be absolutely reliable. If it's marketed at 4 nines, 99.99, it has to be 4 nines. And that's what we're aiming to do, is address that market. So in the essence of time, I think we probably get to our key slide on page 12, which is the outcomes of our PFS. Again, I just want to emphasise the quality of work that has gone into that whole review process to come out with these outcomes. And the result simply is that we are probably, in terms of using detailed technical inputs and conservative assumptions, we've come up with the best, as we see it, in the industry in terms of CapEx and OpEx. We're in first quartile economics, a fantastic NPV, fantastic IRR, and a very short payback. So we do believe that amongst a peer groups that we'll have a second to none, a superior project and capital structure around developing this project. Key notes there, I think we need to say, is that we're using a 10% discount, probably appropriate to the project as it stands today, but it's probably a harsher discount rate than some of our peers have been using. We're also using a very conservative selling price. Competitors probably using a higher price than that. Even so, even with those conservative numbers, we come up with a probably a better, more economic and compelling investment case. So important to say, if we're putting forward an investment case like that, that we do have some sort of sensitivity analysis. So over on the page 13, we put a few cases there just to demonstrate how sensitive to inputs and economics that this is. And some of the key things that I can say there is that, you know, if we're using a slightly higher selling price, very similar to perhaps some of our prices that our peers have been using, along with a discount rate that's closer to theirs, that we come up with a NPV at 8% of over $1.1 billion and an IRR of 68, and of course an accelerated payback of 2.9 years. We're not saying that that's the particular case that we're putting forward. We'd rather be a little bit more conservative, and on the right-hand side of one of those panels there is a 12% case for a discount rate case. But even so, it brings it down to an NPV of around about $675 million. Still quite a respectable, very respectable IRR and payback. Both those cases are at $26,000, and we see that even if we're harsh on the economics, it still comes up with a very compelling investment case. All that is all well and good, I suppose. The forecasts are one thing, but I think the market, probably the big question that overhangs that is it real? And I think the answer to that is yes, it's definitely real. It's a market that was very flat for a long time, and now it's starting to pick up. Forecasts were put into the market by some very credible groups. We've used CRU and a couple of independent other groups that have all pretty much aligned their views. There's a bit of a gap between them, but I think you probably have to look or drill down to those numbers to see what they're including and what they're not including. But even so, an average of basket of forecasts there in that table of 91,000 tonnes out of 2025 suggests there's a lot of room for alternative players, and certainly a lot of room in terms of volume for us to hit our forecast 8,000 tonnes per annum end product. We see also a risk to the, or potential risk at least, to our business model, and that is pricing, of course. So we think we've done the right thing in using a matrixed approach to use the $24,000 a tonne for the end product. However, we do know from our own experience and experience from these independent forecasters that prices being currently received are a lot higher than that, upwards of $30,000 in some cases, and even we ourselves have used and bought HPA for some independent testing, and that's cost us over $100,000 per tonne. Not that we used a tonne, but the point is there that the market is spread, but it's a very opaque market. But not only are volumes increasing, we think through disrupted supply of traditional sources and supply of HPA, that the pricing will increase as well. The risk, I guess, is what will be the response from traditional supply at the moment. It must be noted that no current supply does come from kaolin. 100% of it comes from bauxite, which is turned into aluminium, and then they hydroxide that. That is expensive to do and hard to address a market that is increasing so much. So we see that this will underpin the kaolin source of supply, of which will be a material, or in fact even dominant position player in. So we see that our role in that is going to increase. How do we get around to financing this? I suppose the $250-odd million capex, which we've put into the market, is a very real case. A lot of work has gone around developing that cost structure. It is a substantial amount of money, but we feel that because of the investment case that the HPA represents, we think that it'll be well sought after. It's a high-value product. It's a growth industry, and it's underpinned by significant growth factors. It's a strategic commodity, and in terms of investment cases, we'll see that there's probably quite a few funding options available for us, and we understand that from our direct experience with the marketing trips that we've taken overseas. We take this element very seriously, and as such put a lot of work into understanding what the volumes and growth is likely to be, what's supporting it. Our direct face-to-face dialogue with the off-takers, market participants, manufacturers in Southeast Asia, being China, Japan, Korea, Taiwan, South Korea that is all supported by what we're outlining in this presentation. There are prices that are going through at $30,000 to $40,000 and prices increasing. One key concept that collectively all these visits said is that the current supply is getting disrupted. There's immense environmental pressures, immense government policies in terms of shutting down traditional bauxite supply. And that's putting at risk the supply chain that they're currently used to, and of course they're looking to look for innovative and other forms. HPA itself is not replaceable because of the characteristics that it has, so they don't really have much option other than to take the HPA from kaolin as a serious substitution for current supply. So our discussions with offtake groups have been very, very favourable. We also think there's other options in terms of joint venture on the asset itself, cornerstone investors, some of the direct discussions with some of these key marketing and offtake manufacturing groups have been very supportive in respect to this, the nature of investment. And of course, there's project debt. With those kind of return and economic figures, a fair portion of the financing will certainly be available to be funded by debt, and of course equity. Once the project is up and running, I think it'll have a very superior return, and one that would be very attractive to equity investors. So we see that there's quite a lot of opportunity in addressing what is seemingly meant to be a high capex market. We internally don't think that it's too much of a hard ask. Obviously, it's a big number matched against our current market cap, but we'll aim to build that, less of a difference to be able to support that kind of financing. Probably brings us to our last slide before we get on to some questions and answers, and that's a little bit of colour around what our timeline is likely to be in terms of the development. Of course, we had a very positive and favourable outcome for our PFS. It did take a little bit longer than we had anticipated, but it's probably better to take a little bit longer and get the PFS numbers and inputs exactly right. We did, as I said, we spend a little bit longer on the geology and a bit longer on our metallurgy, determining that flow sheet. We're now very, very comfortable with that, and that's leading us now onto commencing with our BFS. So that top half of the slide, the last slide there, is completed. Our PFS all completed. We're now onto our BFS, and there's a bit of an outline on some of the key KPIs there that we're going to achieve over the next 6 months. We're hoping to finish probably in that second quarter. Got down there on June 2019. It'll be somewhere in that quarter. Some of the key KPIs, including something that's not scoped or budgeted for just yet, and that is the pilot plant, the scoping. We'll aim to try and do that in parallel with our scoped BFS activities. But safe to say that we are fully financed and funded for our BFS, but would look at trying to incorporate a pilot plant and scoping study for that. So I think it pretty much brings us close to the end of the financing and BFS. It's just safe to say in the last page there's a quick summary of some of the key attributes that ASX has. But I'd like to take it over to Simon now and see if there's any questions that have been submitted for me to answer. Simon, do you have anything there?
Great, thanks, Roland. You've got a few questions that have just come through. The first question was, how many companies will be sent samples in Q4 of this year?
Okay, so with our previous marketing, as I mentioned, we visited China, Japan, South Korea, Taiwan. We probably have visited about 30 of those groups. That they are both majors right through to sort of key position players, both manufacturers, traders, offtakes, all manner of sorts. So I think we will ended up having a response of 25 of those groups were interested in seeing samples and follow up. So we put together some marketing parcels and have arranged this follow-up meeting on the 22nd of October. So we'll be off to see the follow-up on the 25 of those groups.
Great, thanks, Roland. Next question was regarding high purity quartz. Which purity or what purity does FYI want to achieve?
Yeah, so intentionally I have alluded to the HPQ or high purity quartz in the PFS. We didn't do a lot of work on the BFS other than know the size of the resource and some initial test work. We will focus on that a little bit more in the BFS because we see that'll have a big impact on, with very little capital, it'll have a big impact on our NPV. high purity quartz is a growing business again because along the lines of the lithium and HPA and high specification, high product, high end demand requires it. So the pricing varies from a low grade to extremely high grade. Our quartz, through the beneficiation, which we'll be doing anyway, the quartz HPQ will be a byproduct of our beneficiation at Cadoux. That comes out at 98.7%. So with very, very little work, we'll be able to get that up well and truly into a high grade market. And we see that will be an easy thing to do with very little work. It'll add a significant value to our project. So where we'd aim to get is higher up that curve in terms of return value or achieved pricing. Probably the highest pricing, just to give you a range. I mean, obviously you can sell sand for just any price, but higher price quartz where we aim to target would be upwards of over a couple of $1,000 a tonne. And we've got a lot of it. I hope that answers the question. Yep.
No, that's perfect. Great, thanks very much. Next question was, what is the current cost of production via bauxite supply chain, and can the companies deliver a product suitable for new applications forecast?
Yeah, absolutely, and that's a good question. So your current supply, the traditional supply, costs close to about $16,000 or $17,000 a tonne. We're aiming to deliver at a fraction of that, or roughly about $6,500 US, that is. And so it's difficult for these guys, because it's a high capital intensive. Most goes through a series of stages. Each stage is probably worth, in terms of capex, is probably a couple of $1 billion. And that's where we aim to deliver a more superior product in terms of capex and opex, and meet that growing demand. Where I think the traditional supply will probably just flatten out. It will still supply, but it'll be disruptive. Not only is it expensive, but it's becoming increasingly difficult to produce.
Great. And just two final questions. What is the difference between the FYI process and LTEC process?
Yeah, again, a good question. Not easy to go into great detail here, but significant differences, really. It's essentially the same principle, and that is a hydrochloric acid leach and precipitation. That's probably where the differences finish. It really starts from the quality of the geology of the kaolin and the best characteristics that can be processed from that kaolin. So each process is slightly different in terms of the number of leaching trains, precipitation changes, the calcining temperatures, a lot, to be honest. Power consumption, efficiency of the actual processes. It is actually significant.
Great. And the final question, Rolly, was, is the company fully funded for the BFS?
Yeah, absolutely. Yeah, we are. For our scoping at this stage, we have currently, as per our last quarter, 2.9 in the bank. The report, September quarterly, will obviously be down from that, but we have sufficient capital and cash in the bank to fully fund our current BFS strategies. Yep. Yes, we do.
Great. Thanks so much for that, Roland. That concludes today's investor webinar. Thanks very much for a detailed presentation. Much appreciated.
All right. Thank you very much, everybody, for attending, and I appreciate your time. Have a good day.
Thank you.
Thank you.